Hello, my good students. Welcome to our session today. I am your instructor, CPA Ringo Frederick. In our class today, it is a continuation of what we started earlier on. Recall in the previous class, we had introduced the concept of accounting for VAT, where we mentioned that if at all you are to account for VAT, we can either use the T account or you can also use columnar account, which is very vital in our quest to understand the whole concept of VAT. So to cement the concept clearly, I want us to handle a question in April 2022, question number 2C. And this question is going to come from a paper in intermediate level. Remember the concept of VAT cut all across from ATD to advanced level. So the concept that you're handling today, this question was tested in intermediate level, April 2022, question number 2C. This concept is also vital for you whom you are doing advanced level taxation. So let us handle that question and see what you are required to do. So for the advanced students, of course, you can get this question just below, or rather on top of this video. We're having a PDF download, which I'll wish you to download. It should be the second PDF. In that case, you'll be able to get this question clearly as it is. So therefore, these are what you are required to do in this question of ours. Let us go through this question and see what the examiner wanted us to do. Or better still, you can also take a screenshot of the question if you don't have the past paper, because it will also be very visible on our end, so that you can work it out together. Okay? So these are what you are told, that the following transactions were extracted from the books of Intercity Limited for the month of January 2022. The company is registered for value-added tax purposes, that is VAT. Number one, we are told that sales to the local market amounted to 3.4. Sales to foreign market amounted to 5 million. Exempt sales I'm given 2350. Purchase and expenses incurred during the month were as follows: cash purchases, credit purchases, salaries, legal services, stationery, warehouse rent, security, I'm having purchase of computers. Now 3, we are told that the above transactions are stated exclusive of VAT at a rate of 16%. So these transactions are stated exclusive of VAT at the rate of 16%. Required, the examiner wants us to determine deductible input VAT, output VAT, VAT payable or refundable. And the good examiner here is giving us how many marks? 11 marks. So given such a question, my good students, first of all, I want to elaborate and be more clear on what we studied in the previous class. We say that in the area where I'll be having deductible input tax, we can always determine our VAT as follows. So we can determine our VAT payable as follows, where the normal way we normally tend to talk of our output tax minus input tax. The other way that you can also determine our VAT payable is if we take our output tax minus deductible input tax. I'll want to elaborate more on the concept of deductible input tax, which at this point we normally term it as a partial exemption. So in this case, we normally tend to talk, let me elaborate more on what we studied the other time, deductible input tax. Majorly, we normally term that as well as talk of a partial exemption. In this case, we normally talk of what? Partial exemption. It will be very key that we understand this context. So in partial exemptions, my good students will find that it will always happen as a result of the following. Basically, you'll find that deductible input tax, first of all, is where a registered person makes both taxable and exempt supplies. So first key thing that we should understand, this is where a tax person, or rather a taxable person, makes sales. This is where a taxable person makes sales of both taxable supplies, and exempt supplies. I will be having this concept whereby the taxpayer is making sales of both taxable supplies and exempt supplies. This is a situation whereby we should be expected to have a concept of deductible input tax. The other key element that we should understand here is that for us to determine the DIT, for us to determine this DIT, we should always be having the following. DIT. We should always be talking, of course, of our total, or rather our taxable supplies. We divide by our total supplies. We multiply by our input tax here. We multiply by our input tax. This will give us what we are referring to as deductible input tax, where we say that, in other words, in the event that you are having the concept of deductible input, you should always be talking of output tax minus deductible input tax. That is one concept that should always tend to clear, or rather it should always be at the back of our mind, okay? Now, there's one thing that I want to emphasize here on the concept of partial exemption. You'll find that on partial exemption, a registered person basically who makes both taxable and exempt supplies is determined as follows. That is the concept of deductible input tax. Of course, this is what we'll be having. And having mentioned that, for deductible, we are going to take it as follows. Full deduction of all input tax directly attributable to taxable supplies. We can have no deduction of all input tax directly attributable to exempt supplies, or we can take what? A portion of this which we are talking about here. So this will be very vital to know when are we supposed to take it as a deductible, what are we supposed to deduct. So in this case, if the fraction of our formula here, my good students, if this fraction is more than 90%, if this fraction is more than 90%, in this case, we are going to total input tax is deductible. In this case, total input tax is deductible. Total input tax is deductible. That is to say, the input tax that I will have computed in our statement, that will be deductible. In the event that you'll find that if this fraction is less than 10%, that is to say, no input tax is deductible. No input tax is deductible. No input tax is deductible. In that case, I'm not going to deduct any input tax. In that case, you're not going to deduct any input tax. In the event that at this point, I'm having any other percentage that is not more than 90% and more, and is not 10% and below, in that case, therefore, we are supposed to take what? A proportion. That is what we are going to do, or that's what we are going to apportion. So we'll always be required to do this test to enable us to know at what point am I supposed to take this item as deductible input. I'm repeating this statement again because it's very vital. It's only that I didn't emphasize it in our previous class. These are what you are saying, that for us to determine our deductible input tax, if at all my fraction of the taxable supplies, basically taxable supplies will include the aspect of standard rated supplies, zero rated supplies, and other rated supplies, which of course you're talking of are petroleum products. Whereas total supplies will include the first three plus the exempt supplies. That is what will give us what? The total supplies. Now we are saying that for me to use this concept, we are saying that if at all this fraction of ours is 90% and more, that is to say the input tax that I had computed, I'm going to take the whole of input tax. There is no amount which is going to be exempted. If at all I'm having 10%, you are saying that no input tax is deductible. Therefore, I'm only going to take the output that we'll have calculated. Whereas if any other percentage, in that case, that is to say, allowed to apportion it then as follows, and the figure is what I'm going to take it here. So to cement this concept clearly, we can consider this question that you're saying here. We can consider this question that you're talking about here, so that at no any given point should you ever be having any issue in relation to this. So allow me to raise here, my good students. That was just a recap and also point of emphasis about deductible input tax. So in our question there, of course, I can share it on the screen so that you work it out together as it is on our screen. But I'm going to squeeze it somewhere. I'm going to squeeze it at this point of ours here. Believing that it's still visible, I've just squeezed it there. Okay? So we are supposed to compute our determine deductible input tax. That is what our examiner wants us to do. But of course, you can determine all of them at once, right? So therefore, let us prepare this statement of this company, Integrity Limited VAT statement. Integrity Limited VAT statement. VAT statement. VAT statement, of course, for the month of January 2022. For the month of January, for the month of January 2022. Where in that case, of course, we'll be talking of our taxable supplies. Talk of our taxable supplies. I'll be having my taxable supplies. Of course, we can talk our amount here. We can talk of our VAT percentage here. We can talk of our VAT amount here. Okay, we can talk of our VAT amount there. So let us identify whatever that you are given here as our supplies. In this case, I'm having sales to local market. I'm having sales to local market. Of course, that is standard. Sales to local market. I was given a figure of 3,400,000. Sorry, I'm having a flu. Then the other case, I'm given sales to foreign market. Sales to foreign market. We know these ones are exports. And at this point, we say that at any given point, whenever we're talking of exports, basically they'll always be zero rated. So I'm given 5 million here, which in this case, basically these are zero rated. This is 16%. Then I'm given that is 0%. Then you are having exempt sales. Exempt sales. So exempt sales here I'm given 2350. So clearly, just by that fact, having exempt sales, of course, key element that should be clicking at the back of our mind is the concept of deductible input tax. Because I'm having this taxpayer dealing with both aspects of taxable supplies and exempt supplies as well. So therefore, determining our VAT here, I should be talking of 3.4 times 0.16. What are we told? Our figures, are they inclusive or exclusive of VAT? You're told that our figures here are exclusive of VAT. Our figures here are exclusive of VAT. So therefore, having 3.4 times 16%, that should give me 544,000. 544,000. This one should give us 0. This one should give us dash. So basically my output, I'm having 544,000. Consider our input. Actually, at this point, you can also determine our taxable, our amount here. These are basically supplies, not necessarily taxable, but supplies. I'm having 3.4 plus 5 million plus 2350. So I'm having 10 million here, 750,000. Okay. So talk of our input. Our input, my good students, I'll just take the figures away they are here. I'll just take the figures away they are here, which in this case, I'm having the following. That is the number one. We're having cash purchases. We are having cash purchases here. So talk of cash purchases. I'm given a figure of 1.3. We are having credit purchases. Credit purchases, I'm given a figure of 2250. We are given a figure of salaries and wages that won't attract any VAT. I'm having legal services. Legal services. I'm having a figure of 1.8. Is it 1.8 or 650? 650. We are having stationery here. Stationery, I'm given a figure of 720,000. We are having warehouse rent. Of course, that is commercial. If it is commercial, warehouse rent. Of course, if it is commercial, it will attract a VAT, 400,000. Security services. Security services, I'm given 680,000. Purchase of computers. Purchase of computers. Excuse, I'm given on 20,000. So you are told that all our figures are inclusive or rather exclusive of VAT. So therefore, confidently, I can just remove this part of ours here because now we have all our data required. So talk of 16% here. That should give us what? 1.3 times 0.16 to give us 208,000. 16%. 2250 times 0.16 to give us 360,000. 650 by 0.16, that should give us 104,000. 720 by 0.16, that should give us 115,200. 400 by 0.16, this should give us 64,000. Talk of 680 by 0.16, 108,800. Talk about 120 times 0.16. This should give us 19,200, right? Believing that we are all getting the same. So in that case, we add 208 plus 360 plus 104 plus 115.2 plus 64 plus 108.8 plus 19.2. 979,200. 979,200 being our input. being our input. So in that case, it's as if we had computed already, we have computed our output tax, which I'm having it at this point. Now, the examiner wanted us to compute deductible input tax, right? The examiner wanted us to compute our DIT. And as clearly as what we saw the other time, our DIT, we are going to take our taxable supplies, of total supplies, of course, times our input tax. That is what we said, right? So therefore, in this case, what will we be having here? I need to compute our taxable supplies, therefore we should be having our taxable supplies as, in this case, of course, I'm having our taxable supplies, you can clearly see I'm having, these are standard and zero rated. So therefore, you're talking of 3.4 plus 5 million. Basically, this is what I'm taking here, the two. Remember the two, standard and zero rated. Those are taxable supplies. I'm having 8.4. We are going to divide by the total. Total in this case, we had seen we had total supplies. I'm having 10,750 times my input, which in this case my input is 979,200. 979,200. So basically that should give us how much? 8.4 divided by 10,750. So in this case times 979,200. Here my input, confidently, deductible input, I can say is 765,142. Then we should apply the aspect of when are we supposed to deduct that. We say that if 90% and more, if greater than 90%, we say that we are going to take all this amount as deductible. You say that in this case, we will take the whole amount there as deductible. If you can recall, we say that if more than 90%, total input tax is deducted. Total input tax is deducted. If less than 10%, if less than 10% here we said, if 10% and less, you say that no input tax is deductible. No input tax is deductible. This is deductible. And any other proportion, and any other percentage, you say that we are going to do what? To apportion. Any other percentage, you are going to do what? You are going to apportion. And that is what we've said, right? So, in this case of ours, my good students, let us determine what percentage is our fraction here. The percentage of our fraction there, if I take 8.4, I divide by 10,750, that is to say I'm getting what? Therefore, this percentage of ours, I'm getting 78%. So, percentage of the fraction here, we are talking of 78%, which is very key, 78%. So therefore, it falls under any other percentage. Therefore, I'll be required to deduct that deductible input tax. So therefore, we need to apportion as it is. So clearly here, we can note and say that my VAT payable or refundable, I should be talking of my output tax, which in this case is 544,000 minus deductible input tax, which in this case you've apportioned it 765,142. Therefore, we can clearly say that our VAT payable should be having 544,000 minus 765,142, which will give us 221 refundable, 221,142. But basically that is what? That is a refund. That is a refund. That is a refund. That is a refund. I know the question that you want to ask Mwalimu is, Mwalimu, what if this fraction was more than 90%? If at all this fraction of our was more than 90%, then our VAT payable will have been this. Then our VAT payable will have been the 544,000 minus the total input here, 979,200. That if at all our figure, this percentage was more than 90%. Then what if this percentage of ours was less than 10%? If it was less than 10%, then we could have only taken what? 544,000 minus 0. That is what we could have taken. So this concept is very, very vital, and it's important that at least we know this concept. It is important that you know this concept in the event that you are having what? In the event that you are talking of the aspects to do with deductible input tax. Then this is another concept which you normally term it as a traceable and untraceable sales. Traceable and untraceable sales, but that one we're going to look at it. This one is now purely for advanced level students, which we'll be looking at it later on. So this is what you are required to do. So up to that point, let us meet in the next session, whereby we're also going to handle another question for VAT. To that point, guys, thank you so much, and let us meet in the next session. Thank you.